Hi friends, Simon here from InformedTrades.com. Today is Wednesday, August 20th, 2014. Time for our daily Forex chart review. Basically in these sessions each day I share the trades I'm placing and adjustments to existing positions that I have on the markets, all as a part of helping traders learn. These are live trades placed on a real account. My entire trade history is on my blog over on Informed Trades. It's also verified by myfxbook.com trade verification service. I'll be going through the trades fairly quickly, so if any of the information I'm presenting to you unfamiliar to you, check out InformedTrades.com. We have a huge learning section there covering not only my approach to trading, many other styles, many other markets. Check it out. Share your knowledge. We can all learn together. Let's get started with a look at the charts. Okay, right now it's pound yen. We'll get to that briefly, but let's start with gold. Okay, gold continues to be in its trading range. It's been hasn't been moving much over the past, really, we had a little bit of excitement here since February up until March, but then starting late March up until now, late August, so the past 5 months really, just been in this range, 1270, 1280 to 1330. It's potential, any range trading scenario, range-bound scenario, buy at the bottom of the range and sell at the top of the range. That's one strategy. There are some sort of ranges within the range. You might identify 1310 as resistance, 1290 as a support level to buy at. Personally, I'm taking a broader perspective. I guess you could argue that I'm looking at it from the monthly chart perspective. Let's look at it with the monthly chart. Okay, so from here, from my perspective, we've completed a pretty big pullback here. 1180 is going to be the bottom that we've tested twice. Let's actually measure that. See, is that a major Fibonacci retracement level? If we, for instance, were to start here, go up to here. That is, so we've completed about, from this swing low, 698, 700, the swing low, from the 2008 lows. So after the financial crisis or during the financial crisis, during that peak time, the lows of that, all the way to 1920, we have made a 61.8 pullback. And that's actually, I should have done this analysis earlier. That's not what I meant to do. Let's actually look at doing AB equals CD analysis here. There we go. Okay, so if we start point A here, point B here, point C is here. Okay, so we've had a 58.8 pullback. Trying to make this work. Okay, there we go. So we are right around there, a little bit higher, 2350. So that's sort of a target for gold, ABCD pattern based on, if A equals, we've had a 58.8 pullback, almost 61.8 pullback, key Fibonacci level. Pretty sizable pullback. I think that's the bottom, and I think we might go to 2300. I think that's a pretty reasonable target to bear in mind. So that was the whole point of this exercise, the AB equals CD pattern. We have a 58.8 pullback here. What would a 58.8 projection look like? Where C to D equals A to B. The distance from A to B was equal to the distance from C to D. We can use that to forecast point D on the chart. 2350 or so, let's call it. I think that's a reasonable target. So from, I think it'll go actually much higher than that, but at least if we had that as a technical target, you might argue that now is a good time to buy. That's sort of the way I'm looking at it from the monthly chart. Anyway, back to the daily chart. Okay. So just a matter of waiting from my perspective. Longer term, I think this is a good time to buy. Shorter term, if you're looking at trading it, support at 1280 or 1270 could be interesting buying opportunities, and selling at 1330. Okay, moving on to Bitcoin. Some early signs of a bottom here. Like I mentioned in yesterday's video, though, there isn't really support established here. Now, we do have a bit of a pullback, and we are seeing a couple long wicks, so this could end up being support. One could argue that this trading range, if we extend that, I guess you could argue that this trading range that we had in April and early May, April and mid-May, is a trading range where that could be a support level the market is now at. So from that perspective, we may get a bit of a rally here. Again, though, I think the trend is really bearish. I think it's more interesting to short. Delete some extra stuff here. I think it's more interesting to short rallies. So if price can rally to to the 50 simple moving average all the way up here, and still below this downward trend line, I think that could be a really interesting opportunity to short from. This swing high to this swing low, if we get a 61.8 pullback, that'd put us at 591, which is where the 50 simple moving average is, and it's also just below that downward sloping trend line. Could be a really interesting level to short from if the market can make it all the way back up there. Okay, so that's Bitcoin. On to the Forex trades. A couple Forex trades now. The main thing I'm thinking about with the Forex trades, I've had these trades on now for 4 days, and usually if a trade is on this long, 4 sessions, and it hasn't moved, I haven't gotten stopped out or haven't moved it to break even, I get a little concerned. So I am starting to get a little concerned about these trades. Just from a time perspective. Now, what is encouraging about this particular trade, my short Euro Kiwi trade, is that we had a long wick off the level that I entered at. So there's a resistance level I entered at. Price rallied up to it, or price had gone down below it. Trade was in the money, then it rallied back, and the bears are still defending this level. We see that because when price touched 58.21, my entry level, the resistance level that was established here, March 27th, and here again, May 16th, here. We see a long wick, so it broke above it, but bears quickly pushed it back down. Or the bulls took some profits, however you want to look at it. Also, this high on today's candle is lower than the high on the August 12th candle. So that's also encouraging that we at least didn't set a new high. This August 12th candle still could be seen as a bearish checkmate. So that's encouraging. Again, it's been a while. I entered this trade. I don't know when I entered it. Maybe August 8th. Maybe it's probably been longer than 4 sessions. I think it's been almost close to 8 sessions. So it's been some time. There's a little cause for concern, but we'll see. At this point, there's enough positive signs where I'll hold on to the Euro Kiwi trade. Kiwi yen. Okay, this is looking a little more comfortable. We had a hammer off support. That was a rationale for entering here on August 8th. And that low hasn't been breached. Again, I view this as a bullish checkmate. I put my stop just below the low of this candle because the idea was that if this low is breached, the trade idea is invalidated, that this is a key swing low. So far, so good on that. The trade is still in the money above my entry point. Not much to do here. I do want to see price close at or above 87.26 before I de-risk the trade and move my stop from 85.40 to my entry at 86.30. Okay, now one more trade, Canada-Swiss. This trade is also, zoom in a little. Zoom in a little more. Okay. So I entered at this black line. Let me actually delete some of the extra lines here. There we go. Okay, so I entered at this black line. The trade is a little out of the money, although we do have the 50 simple and 200 exponential moving average basically at the same point at around 83.25. I entered at 83.10. My stop is at 83.58. So the market is going to have to clear the 50 simple and 200 exponential moving average. I expect those to serve as pretty formidable resistance levels. We also have a Fibonacci level, 50% Fibonacci from this swing high to this swing low is right at that same point. So there's going to be some market resistance there. That's encouraging. I would like to see this trade, head back down, to 82.42 is the first stop, at which point I'll de-risk the trade, and then of course all the way down to 81.78, which is my take profit. So I still definitely like having the 50 simple and 200 exponential moving average here, as well as a 50% Fibonacci retracement. It is a little concerning, similar to the situation with Euro Kiwi. But I think there's enough positive signs where I'm just going to have to sit and wait and be a little patient here. Okay, there were a couple other opportunities I considered. Euro Pound, I thought it could be interesting short from 80.32. Pound Aussie, buying here at 78.24. That's an established support level. But ultimately, the reason I rejected all of these pound yen buying here at 170.53, the main reason I rejected all of these is, I saw some mixed signs on the pound, euro pound, for instance. This looks like a short opportunity. Oh, well, not. Well, I meant to say, so I'm seeing signs of strength in the British pound, but it's just not. I didn't feel comfortable enough with the patterns elsewhere. So pound Aussie, for instance, I'm seeing too many signs of strength on the Australian dollar. I didn't want to short it. Pound yen, this setup, it's below the 50-cent moving average. It wasn't. We have a pattern of lower highs. So while I could see the rationale for entering here, it just wasn't strong enough, to me at least. Especially when I have 3 trades. I already have some exposure to Kiwi or to the yen. I have a long Kiwi yen position, and I didn't think this was strong enough to double down on that, to bet even more on a short yen position. I do think short yen is going to someday be a very, very excellent trade, and I want to be positioned for that, but I want to make sure that technically it makes sense to do that. So being a little more stringent with my trade requirements, last year I may have put these trades on, and I think it would have been a mistake. It may work once, but in general, at least from what I've seen, my sample set, my experience as a sample set, it's better to be a little more patient. Wait for the right trends. We have a pattern of lower highs here. That's no good. And with the Australian dollar, I'm seeing a lot of strength in the Australian dollar on other currency pairs, and it looks weak against the British pound. But I'd rather trade this if I was seeing weakness in the Australian dollar as well. Okay, so that's about it for my trading activity for today. No new trades placed today. I still have those 3 orders on Canada Swiss, Euro Kiwi, and Kiwi Yen. Those trades are still on. They have not been de-risked. If my stop gets hit, I will lose money. So far, I think the technical logic on this trade is good. I'm pretty content with them. A little uneasy about the time, as I mentioned, but we'll see. Didn't really see any other opportunities that I wanted to add to. So that's just about it. You guys gonna have to sit here and wait, see what opportunities come tomorrow. That's about it for me. Best of luck in your trading, and we'll see you tomorrow. Take care.